This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 7:41 p.m. on January 30th, 2020. This is a new member training session, number one. I offer two complimentary free sessions, training sessions for new members to get them up and running on our service here at Clueless Trading. And after that, they can always sign up for advanced coaching sessions. We call it ACS. And those are offered, and anyone who wants to be, who wants to basically move their trading management skills one step forward, handle the trades better, things like that, can certainly sign up for that. That's available on the website. You go on the members area, and you can basically just click that and sign in. I'll provide the link on that later. It's right there. It's on the members content. When you go to the website, on top there's a menu, and then you click that, and there's a link, and do it. They're 5-pack sessions, and those are extremely helpful. Samples of that are on the Google YouTube channel. I'm sorry, or the YouTube channel, Clueless Trading, which all of you should click as a subscriber. That's free anyway. So you're notified every time I'm putting a video out there. And there's a category in there called new member introductory videos. There's a whole bunch of training sessions and such that's there. And sorry, and you can scroll through, click on the ones. They're all titled. Some of them are about technical analysis, all these candlesticks patterns, how to read, how to understand the roadmaps on the markets, and that's how we make the real money in these type of markets. And that's very helpful. So, saying all that, by now, the ones who have been with us for a couple of days now, you know that all my content is delivered, and that's what we're going to talk about today. How to read some of the stuff I put out there is delivered on a real-time Twitter feed. You guys are familiar with that, the real-time Twitter feed from pre-market, generally run from about 9 o'clock. I start posting, and it basically is a running commentary, more than a commentary. It's a running roadmap on how to trade the market, what stock, or which ones I'm looking at that particular day, and I try to be as detailed as possible. Today was a classic day. I'm glad we're having this session today. And by the way, before I go any further, standard stuff. Full disclosure: this is purely for financial education and not for any solicitation or advice. A standard, disclaimer. So and this session will be recorded for people who can listen to it right now. It'll be uploaded to the YouTube channel. Anyone can click it and listen to it. Anyone with internet connection, so your friends, whatever, want to get an idea what we do here, why we do it so well, can always listen to that. So saying all that, let's kick off with the basics here. What I'm going to attempt to do today, which is going to be extremely helpful, is I am going to basically walk through from the beginning of the day, pre-market, to the end of the day, try to cover a lot of these posts and what the wordings are, how to read them, and then of course I'll field the questions. So this is going to kind of get you guys up and running. The second session of this type that we're going to do, we're most probably going to do it on, we'll figure it out. We'll do it either on Monday evening, or sometimes I do it on weekends early, at around 9 o'clock or 8:30. So we'll figure out, Saturday's out of the question, but maybe Sunday. We'll see. So the morning starts off. So this is how the morning starts off. I put out there, so this is the Twitter feed. This is where all the content is delivered. This is the only thing that you guys need to focus on, aside from the video blogs, what we call video casts on the YouTube channel. That's more for the training stuff. That's more for the general commentary, forecast, and things like that. Very helpful. But when it comes to actual trading on a daily basis, this is it, the real-time Twitter feed. Quick reminder to everybody. Most of you know that. You can go on your Twitter channel click on your settings on the right-hand corner, somewhere up there, and then you can. There's a when you drop the settings box, there's a little thing called mobile notifications. You can put in your mobile number from your end. Your mobile number, you get automatic SMS text alerts free directly to your phone anytime I'm posting any trades or any charts or anything that I'm doing here. So please, a lot of people don't know that. It's a free service through Twitter, and it's extremely, extremely helpful. So, so the morning starts off. This is 20 hours ago. So if we open it, you'll see the time. This was I was running a little bit. No, this is last night. What am I doing? Oh, yeah. So sorry about that. So my Twitter feed, basically, I'll be putting stuff up there sometimes, like middle of the night. Not that you have to follow it if there's something significant. So last night futures were dropping like 20 points. That's how we opened up this morning, and then we tumbled a little bit more. And I pretty much said no idea why. Okay, I didn't, So just said monitoring all night. So then right after that, I put out the Chinese death toll, and the whole thing was, the reason futures were falling because Asian markets were just falling apart. So that's the reason our futures here were dropping. So this is what the morning started. Okay, 11 hours ago. Yeah. So right off the bat, very quick, just to give people, get people up and running. This was 8:47 a.m. today. I'll put out from my iPhone. I will put out the quick snapshot of how we are opening that morning. So we opened crappy this morning, right? So futures down 20, 21. Dow Jones futures down 168. Nasdaq futures down a whopping, almost 41 points. VIX, which is, by now you guys should know this, is the opposite of the market. That's the volatility or the fear index. I show that time to time. It's an extremely powerful roadmap because when the VIX is going higher, markets are going lower. When the VIX is going lower, the markets are going higher. So that's the bottom line. So VIX is higher, obviously. It's an inverse correlation, just works opposite to the overall stock market. Good indicator to follow, good chart to follow to get an idea of where the selling will stop and where the buyers will come in. And today was an absolutely phenomenal example. As you know, the ones who were tracking or took some trades, we just it was just phenomenal. I mean, I called the market to the teeth as to when it was going to turn, and it did. Now, some people say, hey, could it be that accurate? Well, it's not me that I'm that much of a genius. The whole point is I know how to read these technical signals in the market better than most people, better than pretty much anyone out there. So I am always predictive. In other words, I'm always gaming the game, and I'm running the playbook through the charts, not but just by looking at whether or not the Dow Jones is down, 300 or 400 points or 200 points. So that's how the morning starts. So you get the picture of the futures. Now, as I scroll along, one of the things that I want to highlight to all of you is I'm sure many of you have been with other trading services. There's a lot of great trading services out there. Okay, one of the largest called T3 Live. He was my neighbor, and the guy runs a shop. It's big. Those guys are big. They're based out of New York. T3 Live. They train traders. They have proprietary prop trading where you can go in there, trade with their funds, give them a cut, pay a fee, all kinds of stuff. Great. And that's just one example. There's many, many other services out there. The unique thing about Clueless Trading, my service is, number one, is very personalized. So it's customized. It's like going to a custom tailor. Okay, you're not walking into you're not walking into a department store just to buy your clothes. You're going to a tailor. So you're tailor making your needs, and it's couture. All right, that's the way it is. And number two is we are very specialized. So that means that we'll be dissecting the market in a way that you have never imagined. Now, I don't expect somebody to become an expert on doing all this technical mumbo jumbo within 2 or 3 days, but I make sure that everyone has a running start to at least understanding some of the messaging that's coming out of these charts that I'm putting across. So we definitely make an attempt to do that, and that's why the training session is important. The free training videos that are on YouTube, and of course, people who sign up for the advanced coaching sessions really take a big step forward. And these are group sessions that I encourage. I don't like people doing private sessions because it's a lot of my time, and secondly, it's more expensive. The group sessions are cheap. Do it as a group. You get a discount directly there, and it's more fun, and you learn a lot. So the key, one of the key features of Crudestate Trading is almost every single alert at one point or another, especially the original alerts, come with a chart in front of you. So you have a roadmap directly in front of you as to what that stock might do, where I'm buying it, and we're going to go through that in a minute. So you have a visual idea. So I don't have to handhold somebody and say, "Hey, buy it at $2, buy it at $10, sell it at 15." I'm already showing that directly on the visual chart because, in my opinion, and I've been doing this for a long time. For people who don't know, I worked on Wall Street for about 14 years, and then I branched out on my own and started my own shop, just trading my own money since 2011. And I started this service in 2014 because I had a bunch of followers on StockTwits, which is an excellent forum for anything to do with investing. StockTwits, definitely, just subscribe to it. I have a stream in there. I don't even have a chance to post that much stuff. I have almost 33,000 followers who follow me on StockTwits. All right. So some of those people back in 2014 pushed me to open the service. I'm pretty much a lazy guy. I love trading my own money. I'm a monster when I'm trading my money, but I didn't feel like sitting there explaining to people why I'm doing what I'm doing. Well, I did it, and now it's a responsibility. I love it. I've made good friends, great people. I've trained a whole bunch of amateur traders to become terrific money making machines. We're not into, and excuse my French, we're not into bullshit. So there's no fluff involved here. We talk straight. We're straight shooters, and we will tell you the upside, downside risks, and all that stuff. So you'll never see an ad campaign coming out on my website telling you, hey, put in $100 and you're going to make 10,000 next month. You see a lot of that stuff garbage out there because that's the nature of the business, right? People want to attract, and there's a lot of snake oil salesmen in any business, whether it's real estate, whether it's anything to do with money. There's always an element of greed. You need two to tango, right? You need the guy selling the garbage, and the other guy who's so greedy will just buy it up because his mind is soaked in with greed. So that's really what happens. All right. So this, let's put it this way: there are good, admirable principle. Energetic stuff on Wolf of Wall Street. I actually know the guy. I mean, I didn't know the guy, but I've met him back in my days on Wall Street. Trust me. So we don't do that kind of crap. All right. We don't trade penny stocks. We don't trade things which are rags to riches. Yeah, sometimes we'll trade stocks which are $1 or $2, and they'll jump up to the $5, $6. But we're not going to tell you to buy 20-cent penny stocks that will blow up in your face because you put all your money in that thinking you're going to be a millionaire next day. So we don't do that kind of garbage. All right. This is serious business. We run the service like a hedge fund, like a proper hedge fund, and our techniques and methods in how we navigate the markets are pretty much the same. In fact, in many cases, better. So that's basically it. So saying all that, as going back to the post, I'm just going to scroll through quickly. So the morning starts off with giving you a quick snapshot how we're going to be opening up. I was this morning, I had a couple of things that on my trade management side that I had to do. So real-time alerts will be slightly delayed. Morning, I've warned people like I won't be posting like right at 9:30, and then I came in at around 10:13 a.m. Gave a quick. Today was one of those days where you didn't want to just jump in and just start buying everything because I'm not that type of guy. Just because the term BTFD, buy the effing dip, right? We don't do that baby stuff here. We buy technical dips, and that's exactly what we did today. So unless I get a handle on how the market is settling, how my charts are settling, and even that gets tricky because 90% of the movements in the stock market are driven by what we call algorithmic high frequency trading black boxes. These are supercomputers run by big institutions, hedge funds, and such, which are trading at nanoseconds, 1,000th of a second. They're moving big blocks of stock. That's the reason why you see so much volatility up and down instantaneously. So we want to make sure that we have a handle on what is going on, and before I go out there and start recommending things. So the first thing that I put out there, so this was the kind of day I needed to be kind of a little bit patient, and it worked out beautifully, as you guys know. As I said, very heavy algorithmic high frequency trading program activity, early session, do not chase prices. One of the things that traders do, we're all guilty of that, myself less than most other people. We love chasing prices. Something's going on, we just like want to just jump in them. It's fine and good sometimes. You can, that's called momentum trading, but you need to know whether the chart, whether the technical chart is giving me the signal to get in there instead of chasing prices. Just looking at markets going up 400, 200 is never going to make you money. Yeah, you're going to catch a couple of good trades, but then you're going to blow up. Guaranteed. That thing I can guarantee. All right. Because the movements in prices are just phenomenally fast because of reasons I just explained. And secondly, a lot of the price movements are fake. In other words, these black boxes, it's called spoofing. They will be putting out some orders just to bump up the stock price. Trader gets excited. Hey, let me buy an option on that. Let me buy a share of that. And within 10 minutes, they slap it down. You see that happen all the time. And you wonder why. It's borderline legal, but hey, it's still legal. And those machines do it very quickly. In the old days when humans ran the market, there was more stability. You did not get 500, 600, 700 points up and down. You had a more steady move up and down. But the humans are no longer controlling the market. They're programming those computers, and the computers are moving at lightning speed. Just want you guys to understand that very simple but important and critical concept. So that's what algo HFT means. Program activity, let market settle down after 12 noon. Then I put out a quick snapshot at some of the big winners overnight. Regardless of markets, whether how crappy they were opening, I had some big winners to sell. So from a trade management standpoint, I was already up for the day. You know, one of our biggest winners was a company called ServiceNow, which is software automation, one of the fastest growing companies that most people don't know about, called ServiceNow. They basically do software automation for corporations. And that stock was up like a monster. At the open, it was up $19 or something. The 312, yeah, it was up like $19. We closed at 313 yesterday. 312 opened up at $333, and then ended the day at close to went to as high as 343. Those options, just to give you an idea, went from one of those options went from I'll give you an exact number. One of those options went from $9, which I told people to, to basically look into that, in the money, which means like, you pay a little bit more for those calls. So just to give you an idea, the 317.5. Bear with me as I look it up on one of my other screens, because after all, it's all about, it's all about making money. All these things that I provide are ways to do it and the tools, but in reality, it's all about whether you're making the coin. So these are February 7th. 1 second. I just have to look it up on one of my other screens. So great. So these are 317.5 calls, paid around $9, and they went to 25. Okay. So if you put $900, you took out $2,500. And this one, ServiceNow. Qorvo, sold it right off the bat. What I do is I get that pop in the morning and I sell it pretty much right away, or I sell most of it right away. If I have one call, if it's an expensive call, I'll sell that right away. With Qorvo, I sold it, I top ticked it. So in other words, it popped up in the morning, then it went negative when the markets fell, because it works with this company is a big Apple supplier. So when Apple started going down, they dragged Qorvo down with it too. And ServiceNow basically kept on climbing higher, but still that come under pressure too, but then it went up. So yeah, so $900 would have gone to $2,500, and if somebody put $9,000, which would be a little bit too much to put in one option on an earnings rate because you could just blow up and you'd have nothing left. But if somebody did put $9,000, then they would basically take out $21,000, just like that. It's no joke. So that's the way it works. So let's say somebody put $1,800 instead of 900, bought two calls, then they would be taking out $5,000, or a little less than that right at the open, like around $4,200. So that's pretty sweet to start your day. So Tesla went bonkers. So I don't want to even get into that, just the way Amazon is. And so that was phenomenal. So all these, these winners, the power winners, were right there to be taken. The next thing that I posted out, just to give people an idea, this is where a little bit of the advanced stuff comes in, but I do have videos on this. My previous webinar talked about this. So the simplest way to read this, and I do show this a couple of times during the day, especially on volatile days like today, is the fact that when look at the structure. Okay, first of all, one of the key things about my service, and like I said, anyone can really do this because it's not rocket science, and the way I draw it, it's very understandable. So you can see how geometrically perfect these structures are. This is the chart, and then I draw the lines over it, or I'll draw the patterns over it, things like that, right? These things are the stuff that I do. Your job is to try to understand as much as possible what I'm showing. I'll do the hard part of putting these things together. I want you guys to understand that. Okay, the more you understand what's being shown to you, the better off you're going to do. So I showed this thing here showing that this had popped up. See the gap open from around 15 all the way to 18. That's the reason why the market's open down 300 points. Let me get this pen. It's a drawing tool. Highlighter maybe. Okay, so here we closed yesterday, and it opens up here. So and the market's open down 200 points. That's the Dow Jones Industrial Average, right? 200 points. So then it started to vacillate. Each of this candle hourly. So each of these candles mean 1 hour. So first hour it opened up, then the candle becomes red. Now candlestick dynamics is something anyone can self-teach themselves. I can on the next session, and I know on the advanced coaching sessions, the paid ones, and I go through it really big time. If somebody had absolutely no idea about the stock market and just wanted to trade options and stock using these type of charts, which are all my charts are candlesticks, right? Not like simple lines and things like that, candlesticks. So they could literally train themselves to trade off any stock just by candlestick formations. A fat green candle means money. A fat red candle means sell off. So if you're short the market, like if you have puts on something, let's say the SPY puts, which we did the other day, which paid us nicely, then you want red candles because you want prices going down, so your put prices go higher. Calls are on the long side. We are betting something will go higher, so we want more green candles on that. But because I've been doing this for a while, I look at these candles and I start to see, I start to read in between. It's just like any other profession. You do it more and more. You learn more and more. I'm still learning some new things almost every day. And I can pretty much, you get this gut instinct like, okay, this is going to happen. And today was a prime example of that. So I show the VIX chart to give people an idea what is, what the market might be doing, because this is a early read on the market. How about that? It's a contrarian indicator. It's signaling what will most probably happen when this starts to fall. And this is early in the morning, right? So when this starts to fall, that means the market is starting to move up a little bit. Move up meaning from being down 200 to maybe down 150. That's a 50-point move from the bottom, right? Simultaneously, stocks will also start to climb a little bit from the bottom, even though they're in the red. Remember, you can make money on stocks that are green or red. If a stock is down, if a stock is down $5, today was a prime example. AMD, we're going to look at that. Applied Micro Devices, right? Advanced Micro Devices. I told people to keep on buying those calls on AMD, the 48 calls from all the way when it was like 60 cents. They more than doubled, more than 100% by the time the day ended. So it doesn't matter if a stock is in the red. If you kind of get in the lower end of the scale, then you have then even and the stock is climbing from the bottom, those options will be hugely profitable to you. So you can still be a red day on the for that price of the stock, but you could have made a ton of money because you bought on the low end of the range. And we do that a lot. We do that a lot. Okay, just so you guys know. So the VIX is basically, I repeat, without getting into it too much, when this starts to climb down, that means the VIX is going to fall. End of the day, the VIX was down here, just the way I arrow showed that this was what was going to happen. And the markets basically went the other way, went like this, and the VIX went a little bit down. We need the VIX down more, obviously, for another 300 points in the market, which I think is coming based on other indicators I'm looking at on my other screens. So that's how we kind of, read the market. Let's move on. What do I do with the? Okay, that's better. I don't want to spend too much on one text and we want time. Then these are the type of entries that we do, the most common ones that you see. So Square. Been making consistent money on Square. Yesterday's so the morning Square opened down also with the market, right? Because it's just the way things are. It's a stock can run against the market. Yeah, some stocks can here and there. I still have some green stocks even if the market opens down 300 points. But in general, most stocks will go fall with the market, because what is the market? It's the indexes of those stocks, right? So there you go. So the Square, the way I write, entry 1, February 21, 76 calls. That means the first entry. Feb 21, that's the expiry for the options. So I got enough time left. 3 weeks. 76 calls, that's the strike price, approximately $2.10. So that's a buy alert. Then I showed the VIX again. That was a shorter term picture of the VIX. This is a longer term picture of the VIX. This is the daily, and this gives me a broader view as to what's going on. When I draw these boxes, that means that's a gap. That's called the gap fill. I try to put markers on these things so people can direct their eyes and focus a little bit more. So this is like a wall. If the VIX broke out of here and went to was 22, the markets would have ended down 600 points today. Okay? So this is giving me an early warning sign. I'm watching these candles, see if they can bust a move, which I don't want it to, because I got long positions on the side and I'm not shorting the market at that. I don't like shorting the market or buying puts on the market when they open down 300 points. Because generally speaking, that's when you're going to start to see the bargain buyers start to come in, the automated machines start buying around those levels. So why the hell should I be shorting the market? An average person, a new trader, or any trader, a lot of emotional traders, we call them RETs, retail emotional traders, they're like, oh, I'm going to short the market right there. Yeah, that's great. In about an hour's time, they've lost their money because the markets have bounced up 100, 200 points before they do another nosedive. So that's what happens. So the VIX is giving me an idea, and this is, I just wanted to show it to you again. Remember, we have all types of traders in our group. We have complete amateurs, we have mid-level, and we have very advanced traders. So I'm catering to the whole group. So I got to put it out there in a format where I can't make it too simple. Otherwise, my more advanced traders are like, what the hell is he doing? And I can't make it too complicated. So my more amateur, beginner to lower intermediate type of traders go, hey, what the hell is that? That's too complicated. So I kind of put in the middle ground, just so you guys understand. Next one I put out there, this was, what time was this? This was at 10:54 a.m., still early in the day, and this is what the markets are doing. So when I'm showing this, to me, it's like I might not like what's happening on the front side of the market. I'm looking for some sort of definitive entry level on a bunch of things that I might own, and then I buy more. If I call it 4, it's down to 2. I'll buy more at 2, as long as my charts are telling me it's okay to do. Because that's called dollar cost averaging. You buy something at 4, and then you buy a little bit more at 2. your cost basis is no longer 4, your cost basis becomes 3, right? Your average cost. So if it surges higher, case in point today on so many stocks, then you'll be selling them at $6 for a double instead of your original price at 4, where you could have only made 50%. So this is these, get used to these. Okay, these are the S&P futures. This is a representation of the futures market for the SPY, SPX, which is really the real market. The Dow Jones is of course a real market too, but that's only Dow Jones 30. Dow Jones Industrial Average is only 30 stocks. Okay, S&P 500 is 500 of the major companies. So the SPX, and this is the futures version of the SPYs, what we call E-minis, is a good roadmap to track and understand, so that we know how to, so we don't do stupid things. So this was 10:54, like I said. So I'm watching this thing here. I drew out something which I thought was going to be helpful to people because I saw it and I was dead right. Remember, just like any other business, when you're dead right, you celebrate your successes and you learn from your failures, right? So I was dead right. And this is not the first time I've done this. So I wanted to see if all of you just, I mean, I even wrote it down, like, focus on the boxes. Look at this, what happened from the 27th. There's 27th, which was just, this week, right? Yeah. So to me, it was identifying a similar, it was starting to resemble a similar pattern. So there was going to be a lot of chop. Remember, every time it's moving up and down, the markets are moving 100 points up and down. So so my intention is to basically create, there's an old saying, I tell my clients back on Wall Street, there's a method to the madness. You want to focus on the method, you're going to come out green on the other end. You want to focus on the madness, you're going to go nuts. So in trading is a very emotional business, right? We try to suppress our emotions, try to be as robotic as possible. Trading will teach you more about yourself than anything else in your life, than any profession. I'm telling you right now. Trading is a highly supercharged emotional business mixed in with money. And there's a lot of other professions like that. Trading is gambling. Options trading is gambling. But here's the difference. Options trading, and listen carefully, guys, ladies and gentlemen. Options trading is quantified gambling. In other words, you know what your quantifiable risk is. You have roadmaps that you can follow so you don't blow up. Even when sudden things happen in the market, and that happens quite often, what we call flash crashes. So the difference between gambling, which I'm sure some of you guys, go out there on the tables and stuff. I don't gamble, by the way. All right, I just don't feel like. I gamble all my money doing options, and I love it because I have control over it, a good control over it. But the bottom line is that guys who play cards. My brother-in-law is a big card guy, poker guy up in Canada. Has a place in Vegas. Like loves, he's a little bit of a baller. We're doing all that stuff. He's very good at it, and he says there's a science behind it. I'm sure there is, but I can bet you the science behind this is far easier to learn and more quantifiable. So it's quantified gambling. Just remember that. And trading certainly will play havoc with your mind. And that's why most people can be traders. I'll tell you that right now. Out of any group, there's going to be one or two who will be standing 3 months from now. I'm telling you right now. Okay, that's just the way it works. And it's not the matter of who's the smartest. Smartness doesn't honestly make a great trader. Great traders are made out of risk. Great traders are made out of courage, and all that comes with some element of learning and speed. You need to have speed. So that's it. And we'll get into the psychological aspect of it, but it's a very important topic. So I wanted to show this. Thing here, the pattern. To me, the pattern came alive. So I said, okay, it's early in the afternoon. It's probably going to chop around, and if the support doesn't break down here, and I wrote all that down. The red lines are support, the green lines are resistance, and it's going to land up here. This is known as a Fibonacci retracement. These are automated numbers. I don't make that up. That's just a standard thing. During large-scale sell-offs in the market generally 90% of the time will bounce back towards the magnet, which is this big blue dotted line known as the 50 fib 50. Okay, and don't ask me why it does that. It's been forever. The markets are very mathematical. So this Fibonacci retracement, that's exactly what it did. And this was a couple of days ago on the 28th. So during this thing and before the breakout happened, I told people to buy. We were kind of picking up things around here, and bang, it hits the Fib 50. It stays above that and then drops hard this morning and last night. And guess what it did at the end of the day? When we see this chart, and I'm sure you guys are at least taking a look at the Twitter feed at the end of the day, it went straight up there. No magic. And I'm going to show you one of those SPY options that I showed. I put it out on my Twitter feed. By the end of the day, your head's going to spin. It went from 4 cents and closed at 62. That's 1,400%. And you know what they're going to open up tomorrow? Heck of a lot higher, probably $1. And I got a bunch of them. I didn't have it from 4 cents. I had it from about 14 cents. So if I go from 14 cents or 15 cents to $1, that's almost 500% on what we call lottos. Let's see. So now, and that's options. This has nothing to do with my genius and stuff. This is the way options work in volatile markets. So yeah, so I wanted the people to direct on that. This is a big bad gap. We want to stay above the gap. That's when the market takes out new highs, which I think will happen, given Amazon's, which is a big heavyweight in the market, and its performance, yes. Then I go ahead, I decided to buy Tesla March 20th, 1,000. This is not the quantity, it's a strike price. 1,000 strike price calls, approximately 170. Believe it or not, these almost went to $2. And these are like stock. Tesla's at 645, and I'm buying calls like 360 points out of the money. But hey, can Tesla go to $1,000 or at least 900? At least show a chart on that for you guys to see. Yeah, I think it can. If they meet their production levels, which they are, and they beat the crap out of the Chinese sales, and they're opening up the Berlin Gigafactory, Tesla will be a $900 stock. And remember, options, you don't need to go to 1,000 to make money. You guys know that. As long as it's moving in that direction, I'll probably get a double or triple, like by the time the stock is up to 700, which I think it's going to hit like right away. Now, one of the things with Tesla calls are they're pretty goddamn expensive. Just the way Amazon calls, very expensive. But then they pay the bills big time. But for smaller accounts, you got to think twice. Whatever the case may be, this is Tesla. So I drew a chart which I had drawn months ago, and I just updated it with this megaphone pattern. Looks like a megaphone. See that? It's known as a megaphone pattern. And guess what? It actually pointed at 900. And if you quickly look at it, there's not much distance between this and this. Another reason Tesla moves like that, because it's heavily, heavily shorted. These big shot billion-dollar hedge funds, for whatever reasons, hate the crap out of Tesla, and they keep on shorting it, and then they get killed. In one day alone, they lost $1 billion today because they're short. So as the stock is moving higher, they're forced to cover, and some of them go short it again. A lot of these guys basically were swearing at Elon Musk and stuff when he was kind of screaming at analysts a couple of months ago, and told the world Tesla is going to go bankrupt, they'll never make another car, blah blah blah. This old guy Lutz from GM, he used to run General Motors. He's the ultimate Tesla hater ever. Like, he literally come up and he claimed on national TV that Elon Musk was a fraudster, that he was making up numbers, because the old guy is a big old fart. He can't stand the fact that there's another company that's taking over, selling far more cars than General Motors and things which are far more advanced. So anyway, so the more the haters, the higher the stock goes. Just remember that. So this is the way things go. Then I go ahead and show another chart, another version of the market, which is similar to that. Put big arrows in there, and I put out, and it's very clear to see that these arrows means there's substantial support here. So we don't want that floor to break. And as long as this floor didn't break, the market explode higher. And that's exactly what it did. Because remember one thing about trading, whether it's option stocks, the overall market, it is a game of probabilities. What is the probability of a thing winning versus what is the probability of something losing? So if you model it out, and as we do it through technical charting, and you see, and the charts are kind of giving you a higher probability that it's going to go that way, then you want to take that trade. And if it's a low probability, you don't want to do that trade. So that's why our visual technical charts are so important. So I write things down. A W pattern is just what a W pattern is. That's exactly what this is. A very large W, right? And you can see that. Everyone with me so far?
Yeah, we are.
Okay,
We're
good.
good.
Okay, yeah. So this, if you look at it very quickly, forget about the technical mumbo jumbo. It's resembling a big W, isn't it? So
Yes.
that's known as a W dragon bullish pattern. That's that nothing that I made up. It's just a technical term. A W is good, a M is bad. So where is the? I'm trying to get the pen. Hold on. Choose pen. Okay, so there you go. Guess where the market ended up end of the day? Like right here. Now, is it going to complete the big W, which is another 300 to 400 points higher? I don't know yet, but there's a good probability it will. So this is known as a W. That's a W pattern. An M pattern is just the opposite, falling. It's a double top, a neckline, and then a breakdown. Okay. So basically, this is just the opposite. It's actually the arrows pointing. It falls, goes up, creates a double bottom, just like it's doing here. Lots of zigzags in between, by the way. Nothing in the stock market is a straight line. And then, bang, goes higher. So simple, but very powerful formation to remember. Let me just get this out. Raise all drawings. Come on, give me my. Good. So I write that down. W dragon formation developing. Again, this is what we call predictive analytics. I'm predicting that'll happen. So if you're getting into some trades at that point, you're one freaking happy camper at the end of the day. All right, or in the morning tomorrow. So because I think the market's going to open up nicely tomorrow morning before they do the back and forth again. So it triggered the reflex bounce in the market because just as this is doing this, the market on the other side is starting to pop up. So I told people to buy the 325, 326 calls, and they exploded higher. The 325 calls, just to give you an idea, the January 21 325 call, they're expiring tomorrow. You could have bought them at 93 cents. That was the lowest. So let's say nobody catches the low. That's fine. Let's say you bought them at a $1.20. They went to $3.80 at the close. So that's 300% higher, 3 times more, and 200% in your pocket. Let's say you didn't catch the 200%. You made 150%. That's beautiful. So I told people to buy those cheap ones, and of course the ones from Feb 7, for Feb 7, next Friday. The same chart again. I'm explaining, so that we are on track, because I don't want to just rushing into stocks back and forth. I want people to get a handle on the market. Today was one of those days, the early part, which we were just getting a handle on the market. I was walking you guys through it, and then we started getting into stocks. So, because you get into stocks, you get the best stock in the world, you get in the wrong time, it's going to make you cry. It's just the way it works. So, and if you get into the worst stock at the right time, you're going to be smiling happy to the bank. That's the beauty about our business. So, same thing here. Wanted to show a picture of, this is off my iPhone. If I've stepped out of my desk for a minute, then I just throw it out on the iPhone, just to give people, it's Thursday, an idea, like all the choppiness that was going on. And this was 12:38 p.m. Okay, next. Right around the same time, the news breaks that the Center for Disease Control confirms first human-to-human transmission of the coronavirus in the U.S. Next thing you know, boom, the market makes another dive, 30, 40 points. just for the heck of it, bought a couple of shares. There's no options on it on this stock, VIR, at around 24 stuff. It's pretty much around the same level. But it is a virus company working on a vaccine, and with this thing spreading, I'm looking at 28 on the thing. So I put out a chart for people to see. This is the picture. This is the level we got in around 24.20, $24.50. Just bought a couple, bunch of shares, nothing crazy. And there are no options on this, so that's the only way I can participate in this move. I think that if things work out and these guys actually come up with a vaccine and the stock could go well above 28, right there. So put out a chart there so people to see the picture. Then, oops, I jumped all the way to the end of the day. And I'm going to just stop in a couple of minutes so I can field some questions, because one thing about this business, there's like 100 zillion types of quick questions and stuff, and some questions have black and white answers, a lot of them don't. So just be aware of that, okay? A lot of them, it's like an answer is in the middle. Then I show the VIX. For advanced traders or anybody who understands the VIX chart, this is a very important chart. You can see that I'm saying the VIX basically, this is the support. If it breaks this, end of the day, it actually broke it. And so they have an idea, like, where it can fall to, what it can do. So it's a very structural chart. Next thing I put out there is the S&P 500. At this time, I'm still kind of waiting for the market to get a handle of to dive in hard. I'm already long a bunch of things, but to really, pedal to the metal. So I just wanted to, like they say, some days you got to be a patient hunter. You want the big game, you just don't go around, shooting off your hips. And you want the big game, you got to be patient, and then you shoot. So bottom line is that this is known as the 34-day moving average, S&P 500. 50-day moving average, and these are very critical supports. These lines are all beautifully still climbing higher despite this big up and down, right? This blue line is the 20-day moving average, and the yellow line diving down is the 5-day moving average. That means that's the shortest term. That's the one that we are reacting to on a very short-term basis. And the 20-day, the 34-day, and the 50-day moving averages are things which are the real story in the market. If any one of these break, see you later. Just see you later. I mean, it's going to be all the way down here. We're going to be filling this gap, and people will be just, you're talking about 2,000 points on the Dow. Things would be smashed. Has this happened? Yeah, it's happened. It happened as recently as July, August. Bang, bang, like, it's happened even now. Like, we'll be down like 600 points, but here we were down close to 1,000 points in 4 days. So at those points, we take down positions, we put some shorts out, and we just don't buy till we start to see some idea of where the markets are going to take us. So I wanted to show this, and I'm going to show it again tonight, and you'll see how this red candle attacking the 34-day moving average, attempting to move down towards 3,200 or the red line, was rebuffed by the big buy programs that came in that I predicted, and they actually turned very nicely green. We want green candles like this. Let's move on. Facebook, one of our members wanted me to put it up there. I'm not really too hot on Facebook right now, but the stock will bounce. Okay, there are better places elsewhere. So Facebook, when you look at this, and I'm going to ask a quick question. When you look at this chart here and you look at these candles, forget the arrows that I put out there just to show, like, where the support is. Does this look like a really broken chart? Just a quick first impression. Somebody.
No.
Somebody else?
Uptrend. Uptrend.
Okay, somebody else?
No.
Okay, so my impression is no, because all Facebook did was come back, retest the red line, which is the 50-day moving average. And this is today. So that's a green candle. That means there was buying going on underneath, despite the stock being red. However, the internal signals are still pointing down. This is something we call the slow stochastics, one of the most powerful, simplest indicator one can follow, what's the general direction. So it shows here Sorry, I was getting a text from another new member asking me the same question that I've explained many times. So where do I hear your live streams? I'm like, how many times have I said it? Just go. Where do I listen? Okay. So let me move on. So, but the key is that indicators are still kind of saying there's a little bit more selling coming. So yeah, the stock will probably short-term bounce. It's up probably $1 or $2 right now because of Amazon. After all, they're all part of the, part of the tech group, right? So I wouldn't be surprised if the stock bumps up to even 216. But that's very decent for an options trader. So generally speaking, no, the stock is not fully broken. This indicator is kind of telling us there's more downward pressure, but that's probably because it was so heavily down today after earnings last night. But I just want to show that, and I put out a 1 week out. Let's go out and buy the 210 calls. Those are the ones that I told people to buy. And a lot of the times I'll actually put the rough approximate price, okay, around $4. So let's see where they'll end up. I'll probably be able to sell them at 5 or 6. Not bad. Nvidia, I'm very hot on this stock, for reasons you can listen to my other webinars. And Nvidia calls were fantastic today. The calls went from the cheap calls December 14, they were as low as 51 cents. They went as high as almost $1.
I bought them at 46.
Oh, you bought it? Which ones did you have? You had the 280s? You probably had
Yeah.
a different strike price. The 280s? You managed to get them 46? Yeah.
Yeah.
So that's great. I didn't even see it go there. I got it mostly around like 50 cents, 52, and they went to almost 91 cents. You saw
Yeah.
that, right?
Mm-hmm,
Yeah.
mm-hmm.
So Nvidia is also up about $2 after hours. And so here's a classic example where you can buy cheap and this one has like 2 weeks left into Valentine's Day. And generally
We gotta love
speaking,
Valentine's.
exactly, this is going to be a serious Valentine's. I mean, all the stock needs to do is climb towards 260 in order for these things to literally be a triple. They don't have to go to 280. Remember that. A lot of the times you listen to these guys on TV and they make it sound like when they're explaining options and stuff, they make it sound like you have to get to the strike price to make money. You guys ever heard that? Like, when you listen to Kramer, Fast Money, and some of these guys, right? And they make it sound like you have to hit that strike price. Like, guys, these guys are these guys are knowledgeable guys, but I don't know how they explain things. All you have to do is as long as you're moving in that general direction of 280, then you're going to print money. You don't have to be at 280. And by the time it goes to 280, you probably have 6 times your money. So anyways, I just want people who are new to understand that. A strike price is what we are betting it's going to go to. But it doesn't have to get there in order for you to make money, as long as it's moving in that general direction. Everyone understand that very simple concept?
Yeah, we got it.
Sounds good.
Yes.
Hold on for 1 quick second. Okay, back. So let's speed up a little bit. So yeah, so this chart at NVIDIA is a beautiful chart. This is, again, a very large W formation. Each of these candles is 1 full day, so a lot of back and forth happens in 1 day, as you guys all know. You guys are certainly picking up fast. So this is, this is where I think it's going to go, at least to 264. That's 15, 16, $17 higher from here. That's big. And if it does get there, that's probably going to get there on earnings, which I believe is the 3rd week of February. So it's a good looking chart, lots of back and forth, but so far so good. Nothing bad about that. And those we call swing trades. So a swing trade is anything which lasts more than a week, if not 2 weeks. Sometimes they might last a month. And you keep on just sitting on it, and bang, it goes. As long as the general direction is in that direction. AMD told people to start diving in. I was actually buying earlier, but I put out the official alert at around And remember one thing, when these charts and stuff are out there late for you guys, you don't have to wait for my thing. You use your own gut instinct too. Remember, what we're trying to do here is we're trying to provide the tools so you guys become like seriously independent traders. You don't wait for every single thing that I'm going to say before making the move. You got to start using your own judgments too. So that's my goal. And I was explaining this to people yesterday too. So my goal is not to have you guys so super dependent on me that if I'm not like, putting anything out there, or if I'm quiet for an hour, you guys are all freaking out. No, I want you guys to basically take control of the wheel. I'm going to provide you with all the right tools. You can learn more as time goes on, sooner the better. And then that's it. So just keep that in mind. So, and many of you have been traders before, so I'm kind of stating the obvious. So saying all that, Feb 7th, this was put out at around 1:17 p.m. Next, PayPal was starting to reverse sharply over the from the lows, so I put out an entry there. I added back because I got smacked on the few calls of PayPal that I had from the morning, but I started buying it directly off the bottom, so I was actually green by the end of the day. Shop. Anyone know Shopify?
Yeah, of course.
Okay. And what's the best way to describe Shopify?
It's,
They
it's a-
are, go ahead.
they're just a digital platform for,
Online
like
shopping.
online
Exactly.
shopping. Yeah.
Big time. So we call them in the business Amazon Junior. In fact, its growth rate eclipses Amazon's. They're growing and they're a Canadian company. I mean, look at the stock chart. It's just going to make your head spin. This stock is like Tesla. It's going to go to $1,000. I'm telling you right now. They have serious management. Their business is exploding, online commerce, and they set up, I mean, their technology is well beyond anybody else's. The stock is hot and their technology is up there. No one can touch them. So we call them Amazon Junior. Now, with Amazon being up a gazillion points, since I put this out, I didn't know Amazon was going to beat numbers that, and fly off the handle. But because Amazon honestly has been the most poor, it has been lagging the rest of the Google and Facebook and Apple. It's been lagging all those guys. It was like way down compared to the rest of the guys making new highs. So today it caught up in one single night. It's like, see you later. Now it's going to go to 2,500. So, it's amazing how these things work in this business. In one single night, it just took out everything. For last 2 months, it did really nothing. We have traded Amazon back and forth. I'm like, you know what? I'm not going to bother trying to chase this. Next thing you know, it's down $5, $10. So I kind of slowed down my trading, other than buying some very nice calls today, which are going to be like a big freaking jackpot in the morning. So anyway, so the bottom line is, in one single day, the chart totally changed. It's amazing. I've seen this happen a bunch of times before. It's just wild. So anyway, so Shopify, 475. They're kind of expensive calls. The first one I bought was on each call cost like $1,000, but they were up to like 1,300, 1,400, and the 480s were around $9. They closed it around 11, and tomorrow probably going to open at 14. Because the stock is up almost $10 after hours, thanks to Amazon. Okay, then I'm starting to see things warm up. Okay, with the technical indicators, my signals flashing on my other screens, blah blah blah. I put out some good ideas out there. Threw some ideas out there. Nvidia, Square, PayPal, Shopify, AMD, DocuSign. This company's getting bought out, and it just made a new high today. It's a slow mover, but it's great. It's going to get bought out because there is talk of a private merger, and a private equity firm, what we call PE firms, will take them private at a higher price, hopefully at 90. Bang. Stock was up all day, actually, before, even when the market was down. Clovis is a highly speculative biotech play, great company, real cheap. Calls cost like 15 cents, 20 cents. I just keep on buying it every day because twice within the past 2 months, I've woken up in the morning, the stock's up 14%, and I'm up 4 times on my money, including last week or 2 weeks ago. We were buying the calls at 40 cents. I sold them at $2.50, and I wasn't even at my desk. I had to do something, meet somebody on a business appointment. I had to pull up on the turnpike to sell like a whole bunch of calls. Just click, gone. Okay, seriously, that's Clovis. AYX, the database company, Alteryx, most people know about it, just keeps on slowly moving higher every single day. Options are kind of boring, but hey, they keep on moving. So I put out a bunch of names. That's pretty much it. Acceleron, I gave it to you guys the other day at 75. The stock is at 87. Those calls, we bought at 2.5. I sold a bunch around 4 yesterday. It was yesterday, right? Yeah. Acceleron was yesterday or the day before. Franco will remember because we were talking about it. That's the biotech stock.
Yeah, I remember.
Yeah, so it was yesterday or the day before.
No, it was yesterday.
It was yesterday. So it's basically up from the time that I sold to buy it. And again, I showed a nice chart, triangular chart on that. I'll be able to pull it out. Stock was up 4 by the end of the day, so the calls went up like fast. I'm like, nice. So I left a little bit in there. I wasn't even looking at it, and then I looked at it in the middle of the afternoon because one of my alerts came through, and the freaking thing is at 87 in this market, and the calls, I like, whoa, and the calls were at like 10 and change. So I'm like, great. So the few that I had left, I'm like, okay, I took out a little bit more. I think I've just like 1 or 2 left. And this stock could go to 100. This is a biotech stock, but I did tell you guys to buy it. So those are speculative things that move really fast. So not every one of them move like that, but hey, why not? A win is a win. So then at that point, I am starting to, so look at this. This is what, what money, these are like the money plays, all right? I showed you the same chart in the morning saying there's a nice, that there was a high probability of this breakout, this W formation. And what time was this? Oh, this was at the close. So the Twitter kind of skipped that. This is what was at the close. That's mind-boggling. And this is what happened starting around 2:30. So you can't, there are I don't know any other services. I mean, I've been with other services before who can show you these tactical roadmaps, i.e. these predictive roadmaps before they happen, this accurate. I mean, this is like so highly accurate, it's not even funny. And unless somebody is a trader making money, they will never feel the joy of something be so right. Like you could literally have made your month today alone if, and I'm not suggesting anything, you guys do whatever you want, if you piled in a big chunk of money right in this zone when I showed the pattern symmetry. You guys just wiped it out and said, I'm done for the month and I'm just going to play with some scrap in one day. Okay. So this is the pattern symmetry that I identified, just to repeat. And I said that if this holds, this is what's going to happen. And it's exactly what's going to happen. And if we get into this zone tomorrow, if I'm sure there's going to be some selling around this level here, then the market literally is going to go back to its old highs that it printed earlier on this week. So that's the end of the day. The VIX, which I told you guys was going to slip down, is what it looked like at the end of the day. And if you guys remember, the first one that I showed in the morning, the VIX was up here. Remember that? So each one of these candles, as it's developing, I'm shooting out the alerts out there, buy, 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 buy. Because when these candles break like this, that means they're going to come into these support zones where they're going to bounce again. Just the way things work. That's why the markets are fully automated. And this is telling me that there's more room to fall before it gets oversold again, known as the stochastics. Same thing as relative strength. So this is it. I mean, it's just like, it's powerful. And I can see that if it falls here, and this one climbs back into negative territory or down towards 0 or below 20, that means the market is getting a little too high on the high side. That means it's going to start to pull back, and this is going to give me the first indication. The VIX. S&P 500, same story. This is where it closed at the end of the day. Big W. Very, very constructive finish. It doesn't mean it's going to go straight up from here. It fell straight down from here. It can kind of chop around a little bit around here. As long as we don't break this line again, the market is good to propel higher. So for now, people who are not into technical, just starting to know a little bit, don't get too overcomplicated. Just look at it in a very simple way. Like, what's this pattern looking like? So that's it. Get your eyes trained to look at it and your brain to understand faster as to what might happen. And I try to write down as much as possible. DocuSign, another company. That was Oscar, our new member, put in a comment. I like that, This is a great example. Once in a while, I put out this stuff. This is an example, a text I got from a member who was freaking out. And basically, when the market started falling, obviously not following my charts at that point, says, okay, that's it. S&P saying, welcome to S&P 3135. That means 100 points lower. That means we are going to fall 700 points. So I didn't show the person's name. I'm in the business of shaming anybody. He's a great guy. He makes a lot of money. But right at that point, he was very emotional, because I wanted to highlight that, because that totally correlates with retail emotional panic. Okay? It's just like, man, you should be looking at how oversold we're getting and where the bounce zone should be, instead of thinking, there we go. And that was the same time that the CDC report came out about, or the other second person was detected, third person was detected with human-to-human coronavirus stuff, and like, that's fine. I just want to show an example. Let's not get emotional. Try to be not emotional at all. It's almost impossible, but I'm just saying. So, so that's basically it. Just to give you an idea. Sometimes I'm throwing out, these SPYs, for example, it's 329s. These ones closed at 62 cents, and they were literally at 4 cents, 6 cents, 7 cents. I got it mostly between 11 and 14 cents, and a little bit less. And they closed at 62 cents. That's like buying something at $1 and it's up to $62 at the end of the day. You can look it up. It's like wild, that from the turnaround. Okay, when the market started turning around, you could have bought as much as possible at 7 cents or 6 cents, whatever, and it went to 18 cents. And if you held it and you looked at the charts and let it flow, 62 cents. Remember, if you buy something at 6 cents and it goes to 62 cents, that's a 10-bagger. That means your net profit is 9 times. So you put $100, $900, $1,000, $9,000. Now, does this happen every day? No. These actually happen on days that the market opened down. So the days the market opens down, you start to track the way I just showed you guys, a very simple way how to look at my things, is the days you're going to make the most money. The best days are the market opens up, you sell everything in the first 15, 20 minutes, sit back, market crashes, you start doing your selective buying based on the charts, not just randomly. Markets don't always bounce up just because they fall. But there's a technical dip and there's an actual breakdown, the two different things. So those are the days you're going to make the most money. Or you came in the day and you don't have that much positions long, so you're not hurt at all. And then you look at the market down 400, 500, 600 points, is the day you start sitting there just drooling, like where to get in, what to buy. And bang, by the end of the day, if you want to close out your positions, you got 30, 40, 50, 60, 70, 80, 90, 100%, do it. Money in the bank never hurt anybody. And that old saying, cash is king, is total bullshit, okay? If cash was king, then how would you make money? You'd be always sitting in cash. So, cash is only king if you don't have crazy positions which are going the other way short term. So it's not that cash is king. You hear that term a lot. Oh, cash is king. Yeah, that's great. That means you probably never made any money in the market. You never bought the lows, and cash is king. If we're in the cash business or just sitting in cash, why do you want to be a trader? All right. So saying all that, let's field a couple of quick questions. And if you want a lot of technical question stuff, I'll let you know. We can cover that later. But please, questions, anyone?
Mm. Um, let me ask you about Acceleron. Do you think is what's the turnaround on that particular stock?
Very
Like, let's
fast,
say
very fast turnaround, as we can see, right? So let's take a
it
look
flew.
at the, yeah, it flew. It's flying. It's flying. I
Hmm.
mean, there's like no stopping it. This is like
Yeah.
a mini version of Tesla. I mean, I had no idea what this stock was. It was mostly trading between 40 and 50. And I got in, I told you guys to. So let's take a look at a shorter term picture on Acceleron. And this is how I drew the chart. I don't know why it took away my. So this is the way when I first showed the chart, Acceleron, I showed you guys a triangle.
Hmm.
Just that. Watch what I'm doing. And by the way, everyone should practice around tooling around with like drawing some lines on the charts and stuff. It's fun and it makes you money. Let me see here. So this is what we call. So I didn't get into the stock when it was piping up to 9,900. I looked at it. I just happened to be looking at it at the right time. I did a quick checkup on the company, real. I forget the drug, but it was something very innovative, something very new. I had another stock like that, which I still have, Karuna Therapeutics, which went from, we bought it at 62. The stock was jumping from 20. It was the hottest stock in the market. It was like 2 weeks ago. I told people to buy it at 60, 65. The next morning it was 150. 150. Okay. Sold most of it out around 110, 120, got back in around 65, went to 110. And right now he's at 94. The best part was before I had to just buy shares. Now I can buy options. And I did mention that too, KRTX. So certainly watch
Hmm.
that one too, because that baby is, those guys are monsters. Schizophrenia. I mean, that's a serious disease and mental disease. And they're the only ones who are coming up with things. So I told you guys to really look at this thing. If I remember yesterday, Wednesday, no, it was actually Tuesday. I think I mentioned the stock because I remember the triangle. Whichever the case, the stock was around $75 right here. So the way it looks like here, it's drifting higher. So right now it's closing into 90. So this one, from an option standpoint, you want to buy the options. I'm going to sell the rest of my options tomorrow because I have the 80 calls. So I would rather buy at this point the 90 or 100 calls, the strike price. Okay, number one, because then it lowers my cost and I take all my profits in my pocket. So let's take a look at the daily. So the daily is basically telling us that obviously the stock was very, very heavily shorted. Now, what that does when a stock has a large short position, that means all those guys who shorted the stock, just like Tesla, they have to cover. They are forced to cover. They might hate the company, but it doesn't matter because they shorted the stock. Maybe when it started jumping up at 60, they're thinking, oh, it's going to drop back. And the stock went the other way. All of a sudden, the shorts are losing money big time. If a shorted the stock at 60 and the stock is at 90, what percentage are they down on? Remember, a short seller sells stock at a price. We buy stock at a price. So a short seller sells it at 60. Now the stock is at 90. How much is he down percentage wise? Somebody's got to answer me this.
Well, repeat that
It,
question again. I'm sorry.
okay. When I talk about the shorts, which are very important because Tesla is going through a major short squeeze, Acceleron is going through a major short squeeze. A
Hmm.
short seller is somebody who's short. He doesn't buy, he sells it short, right? So he sold it short at 60. Now the stock is at 90 almost.
Hmm.
So how much is he down? Because when you sell something short, that means you have to buy it back. So if you sold something at 60, let me ask you this question, and everyone just think it's not hard, but you guys have to understand this concept. Let me get this pen.
Negative 50%, I think.
That's correct. You're down 50% because when you are down, and I want everyone to understand this concept, okay? If somebody's selling short, Okay, somebody, I'm going to put SS, selling short at 60 here, betting the stock will go down because that's what a short does. He bets the stock is going to go down. Instead, the stock is now at 90. Okay, so he sold it short at 60 and now it's at 90. So that means he is down, just the opposite of buying something at 60. If we bought the stock, let's say we bought the stock at 60 and it's at 90. How much are you up? You're up 50%, right?
Yeah.
Exactly. So a short seller is upside down. He sold the stock at 60. He was hoping that the stock would go to 40. I mean, let's say he was hoping the stock would collapse down to 30. So that means he would make $30 on his trade because he'll buy it back at 30 and capture the $30 in the middle. You got it?
Yeah.
So he would make 50%.
He's a
It's kind of
hater
a,
too.
and this happens all the time in the market. All right. So it's a simple concept, but people, because they're not used to short selling, they're like, it's just too complicated. It's not. Just remember one thing. When you buy something, you want it to go higher so you can make a profit. If something goes from 60 to 10, you make $30. So for a short seller, it's just upside down. He sold it. Short seller sells short. He borrows the stock and he sells it short. He borrows the stock from somebody else, like some other firm, whatever. He has to give back the stock to them. So if the stock goes to 30, he just made himself $30 and he gives back the $60 worth of stock that he bought from that other person. He's happy. Now, if it goes the other way, just the way for longs, if we buy something at 60 and it goes to 30, we're like, holy crap, we're down 50%, right? And options, it happens a lot. So instead, just the opposite. A stock going up is a nightmare for a short seller. A stock going up is happiness and joy for regular long traders, people who buy long. So anyway, so saying all that, I don't want to get into it too much, but that's the concept. It's just the opposite. Just the opposite. One second. So let me get this out. Okay. So now the way the stock is looking, let me try to draw. This is not necessarily a technical chart, but I'm going to show it to you because you asked me that question. Just simple psychologically, where do you think the stock's going? Anybody else before you answer, John? If a stock is almost at 90, where do you logically think it's going to go? I'm going to just pick names. I'm just going to pick names here.
Up.
The stock what?
Up.
Well, that's obvious. It's going to go up. I mean, come on. I mean, it's kind of funny, but okay. Of course it's going up, That's not my question. My question was that like a blind person could say it's going up. No, I shouldn't say that. What do you call the kid could look at this and, okay, Daddy, which way is it going? It's going up, Daddy. It's obvious. It's giving you the finger. It's giving you the middle finger to the shorts. Like, this is like a total middle finger. It's like Tesla going up like that. It's like flipping birdies at the short hedge fund guys who are losing $1 billion a day. Amazon just killed so many short sellers today. It's not even funny. Those guys, some guys are going to throw themselves off the, there are going to be some jumpers in New York today. Those so-called like smart guys, like, yeah, right. They're all shorting Amazon. They're like dying. Like some hedge funds blew up today. Like literally, like that's it. Because they probably bet hard against, they're going to miss numbers because they're spending so much money on the trucks and delivery. They're building warehouses, Amazon centers, like in our basements. Like everywhere you look, there's an Amazon box, right? You go to 9/11 or you go to Quick Check and there's like an Amazon locker box. You guys seen that, right? It's not like all over. You go to like what do you call Union City? You go to Weehawken or wherever. There's an Amazon locker box. It's like, woo, what's going on? It's like invasion of the Amazon locker boxes. So bottom line is that's what happens. So this is giving you the birdie. So I'm gonna just ask a question. So we have Miss Jeanette, right?
Yes.
So I have a simple question. Don't overthink this question, okay? Because I know you're a smart lady. If a stock is close is almost at 90, what's the next logical number it wants to go to?
100.
Thank you. See, Jeanette just took you guys off all your miseries. Like, everyone's thinking, like, man, what kind of calculation I got to do? Exactly. It's psychological. Round numbers. 80, 90, 100. So the first stop is going to be like 90. It's almost there. It's going to open up at 90 tomorrow probably. And then it's going to go to 100. I think the stock wants to go to 100. And that's a psychological number. So that's it. So that's your direct question to answer. Next stock anyone wants me to quickly look at, or any question that you have. And by the way, I see a lot of new names here. Ricardo Santos, Mr. Rodriguez, you guys are free trial subscribers. Great. And Ronaldo, did you I texted you back. Did you manage to go ahead and register for the thing? Because it
Yeah.
wasn't going through. It was that stupid newsletter box, right?
Yeah, when I click newsletter, it wasn't letting me sign up.
Yeah, for some, I don't see it coming through, but let me know if it came through. I mean, if I saw it come through or not. If it
It went through.
It did go through? Okay, I'll check it and let you know. No problem. Yeah, there's some technical bug on that newsletter. When you click the newsletter box, it keeps on telling you to input information. Okay, so what other stock? Let me see here. So let's take a look at Shopify. It's a very powerful stock. I mean, chart. Obviously, it's a powerful stock. I'm such an idiot. So the thing is, this is a very long-term picture of the stock. And the first reaction is, it is going higher. The second reaction is, what if it doesn't? So that's the risk we got to take, because it's a great company. But what happens? What's the problem with great companies when they report earnings? They got to come with great numbers. Great numbers. If they don't meet those numbers, even by a little bit, bang, it falls 10, 15 bucks before it moves higher again. So that's why earnings are always a 50-50 toss. They just have to deliver the perfect numbers. So it's like the expectations are way too high. It's just like expectations from your favorite athlete has to be high. So if he's in a major game and he doesn't perform, you're like, what an idiot. It doesn't matter. So the same thing with stocks and analysts, right? So they're like, oh, they didn't meet the high bar, so let's put a downgrade on them. So looking at it, the first stop for the stock should be 491. And like Jeanette said, if something is at Shopify is at 484 right now. So Jeanette, I'm going to ask you again. So where do you think psychologically the stock wants to get to very quickly? It's at 488 right now after hours. So where do you think the next psychological number is? You know it. Yeah, exactly. 500. There you go. Nothing to overthink. So from an option standpoint, that's beautiful. You can buy the 500 calls for next week. And I like Shopify because, look, they sell a lot of stuff. Valentine's Day is coming up. Amazon just did phenomenal. So those calls, I believe, if they don't get too expensive, you can buy the 500 calls. I'll put it out there tomorrow, probably at like $4 or $5. You can buy like one or whatever, and then double your money. I think the stock's going to 500. So any other quick questions before we get done? No? Okay. One last thing I want to show you guys. So this is the actual market trading after hours. Globex trading from here to Hong Kong. China markets are closed till Monday because they have the Lunar Year holiday. And Europe's going to open around 3 o'clock our time, middle of the night. So I just want you guys to appreciate something. And this is the mind-boggling part, and how unbelievably symmetrical, like a mirror, this the technical charts are. I don't control the market. I just structure it. This is what the market does. None of us control the market. But look, if I put, let's say this is the mirror. And I just want you guys to leave this session appreciating this. There's your mirror. This is one side of the mirror. This is the other side of the mirror. Look really carefully. How similar do they look? Like literally exactly similar. Yes or no?
Mm-hmm.
Right. Now, I told you the markets would hit this level. This is Fibonacci 50. This was Fibonacci, I'll show it to you. This Fibonacci 61.5, 61.8. Whichever the case, this big dotted line was where the market wanted to go to. And that's exactly what it did. Now, this is where we are right now with futures flat over right now out there. Look at this portion and look at this portion. Is this almost exactly the same?
Mm-hmm.
Now, also, now what I'm explaining very simply, and you see these things very powerful. The best traders that I have, the best ones I've trained, have always taken these technical concepts and stuff and just looked at them in a natural way. If you like beauty in nature, what is beauty? Beauty is when something is symmetrical, right? When we find somebody else beautiful, that means everything is symmetrical, like their eyes, how they're placed, their ears, like whatever. You find an animal beautiful or cute, it's like big eyes, like, we got a lot of animals in the house. And I'm not talking about myself. I'm talking about our rescued cats and dogs. We got 3 dogs. There's one already yapping, Bruno. So he's a Papillon, the one with the big flappy ears, So it's like everything is symmetrical. In nature, everything is symmetrical. That's what creates beauty. When something is completely twisted and one side doesn't match another, humans are designed to look at it as not pretty, correct?
Right.
Exactly. So it's the same thing as this. So when you look at this symmetry here, you're going to see that it's pretty much exactly the same. This small back and forth is exactly what's happening between 4 o'clock tonight and now. Now, if this is the case, and I'm going to ask this, and you can just answer it in a very simple way. The market always, big movements in the market. These are big movements, 600-700 point type of movements in the market happen. Each action has the equal and opposite reaction. That's Newton's law of motion, right? Every action has an equal and opposite reaction. So if that's the case, what's the next move on the market?
It's gonna go down again.
Absolutely wrong. Jeanette, look at this picture. This is your mirror. This is the exact mirror image.
It's gonna go up.
And what is the and if I show you this, this is the reaction down, and this is what we call a high probability move. There's no guarantee it's going to happen, but I'm pretty much sure it's going to happen. This is what it's going to do. And at that point, we call it pattern completion. Done. The pattern has been completed, and at that point, the market will basically, in my opinion, just the way it came from here, it'll fall again. Does everyone understand what I just explained?
Yeah.
Yes.
Exactly. So basically, somebody who said that the market is the market's going to go down, that person might be right too. Why? Because let me draw this out. Because we are in a trading range. We are in a trading range. So you could be very right on what you just said. So if that's the case, who was that? Who said that it's going to go down? Franco?
Yeah.
Okay. So you might be very right because the market is very volatile. Franco might be giving a more advanced answer other than the pattern symmetry answer I was originally asking the question with. What he's basically saying, just so everyone understands, that the market is stuck in a trading range like this. If this trading range is not broken up in a big way, then the markets will fall again and at least try to retest this red line. And I think that was what was going through your head, correct?
Yep. That's exactly what I thought.
That's just read your mind, man. So he's dead right. And even if it does that, that's a-okay, as long as we don't break below this red line border, what we call the gap. If it breaks below the gap, see you later. We're gonna come back and buy things real cheap again. So just passing it on to you guys. So guys, thank you for attending. And every one of you who has signed up as a gold member, I look forward to working with you guys. Every one of you is a free trial member. You'll have one more session and then certainly join us. You can cancel anytime you want, but I can assure you only one thing, that you will have a higher probability of controlling your trades, making more money. And number two, you will never, ever look at the stock market the same way like you did. Never. You will look at it in a robotic, mechanical, technical fashion. You guys are already in it. In one session, you guys have answered all the right questions. And once you look at the market in a very defined robotic way, it takes a lot of the emotions away. Even though it might not always do your bidding, might not always like follow what you want it to do, but you're going to be less scared and you're going to do less stupid things. That's at least been my experience with myself. On that note, have a blessed evening. Thank you so much. And do pass the word around. Good night.
Right.
Have a good night.
Good night. You too.
Good night.
Thank you.